Now, despite losing AGOA access privileges back in January, which essentially allow the country to export goods into the US on a quota-free, duty-free basis, Ethiopia's exports to the US rose by double digits. The US government revoked Ethiopia's AGOA access, citing gross human rights violations in the conflict in the country's northern region of Tigray. Despite that, in the first 3 months of the year, Ethiopia exported goods worth $167 million to the United States. That was about 56% higher compared to the same period in 2021, and the highest really in the preceding 5 years. Now, the country is Africa's biggest coffee exporter, remember, with that commodity making up roughly a fifth of exports to the US in 2019. Between then and now, coffee prices have nearly doubled, going as high as $257 in trading in New York in February. With Ethiopia having exported 210,000 tons of coffee in the 9 months to April, the country's export revenues jumped by nearly 80% year on year to nearly $894 million. So the question then becomes, is this surge we're seeing in export revenues just a reflection in the surge of the price of Ethiopia's main exports, or is there something more at play, something we're missing perhaps in the data? I explored that hours ago with Zemedeneh Negatu. He's a global chairman of Fairfax Africa Fund.
Look down 2, 3, 5 years down the road, and if AGOA was suspended, for the next few years, we certainly have a material impact on Ethiopia's planned export strategy for the United States. But as of today, last year, I think AGOA exports were less than $200 million. So you don't yet see that impact, but if it is to continue, it will certainly be material.
So then your contention is that looking at this data, we should essentially be aware of the sort of context, the wider economic context in which this is happening as well, because it's coming at a time when coffee prices, especially in the first 2 months of the year, I believe, we hit $255 a unit for iced coffee trading in New York. Gold prices have been relatively steady, over $1,800 an ounce for the bulk of the year so far. So essentially, Ethiopia is riding that boom, that commodity price boom, isn't it?
Right, absolutely. But on the coffee in particular, I think it's not just, yes, prices have gone up very significantly. As you know, Ethiopia produces premium Arabica mostly.
And it is the biggest producer of coffee on the continent.
Exactly, the biggest and the fifth largest in the world. And it's producing the high quality Arabica, which has been in high demand, and the prices have gone up. But the Ethiopians from early on, not only were they banking on higher prices, but the volume. So volume also in the first 10 months of this fiscal year has also increased, I believe, by 15 or 17%. So it's price increases, no question about it, but they've also, their strategy of increasing volume has also paid off. The mineral resource play is actually even more interesting. A couple of years ago, total export in the mineral resources was less than $100 million. Last year was over 500 million. That's because they rejigged the policies to give more incentives to artisanal miners, and also cut back or discourage contrabands or illegally exported, especially gold. So these combined offset what little discouragement there may have been because of AGOA. As I said, AGOA is a forward-looking threat as opposed to what it is today. But I'm also very confident from what I hear in DC, hopefully from my friends in the administration, hopefully by January 2023, Ethiopia's AGOA privileges will be reinstated. We'll see.
For a lot of the apparel producers in Ethiopia, having access to the US market through AGOA, that did give them an edge vis-a-vis their competitors in, say, Bangladesh or Vietnam, for example. So where does this leave them in 2022? It might be a one-year hit, but it might be a painful one-year hit.
For a few, yes. Let me give you an example. We have a factory in Ethiopia, which I'm the chairman of. It's a big multinational company. I'm coming to your point about how can Ethiopian manufacturers compete against, let's say, Southeast Asian manufacturers, Bangladesh, Vietnam, and others who export to the United States without AGOA privileges, right? What I think Ethiopia needs to focus on, and I'll use our factory as an example, is our productivity at our Ethiopian factory is about 95% of our European factories already. And we've only been in Ethiopia less than 4 years. So I think focus on productivity will offset any risks or discourage. By the way, this is important. Ethiopia can still export to the United States. It's not prohibited. It's just that it won't have those tariff privileges of 25, 30% when these products land there. But however, if you increase your productivity with the very competitive labor cost, the very low operating cost you have in Ethiopia compared to, say, Bangladesh or Vietnam or some other, even Sri Lanka. Final point, AGOA is scheduled to expire in 2025 for everybody. Okay, so we're only, if the Congress does not renew it, we're only talking about another 2 more years for everybody in Africa. So maybe even Africa as a whole needs to rethink its strategy of depending on AGOA for the viability of the manufacturing industry in particular for the long haul.
What about, I mean, if you look at classic economics, when we usually look at currencies and exchange rate, and we look at Ethiopia, for example, the birr has weakened by at least over 100% over the last 5 years. On paper, that should give it a key edge in terms of being competitive, in terms of cost, in terms of unit productivity. But is that really the case? Does that weakening of the birr actually translate into a cost competitiveness for manufacturers?
Right. Ramah, you're raising a very important question that's debated in a lot of economic circles. If you have an economy that's industrial based, that is value added, then you can use currency as a competitive advantage. The challenge in Africa is much of what we produce in Africa, and including in Ethiopia, as I told you earlier, is commodity. So coffee prices are not set in Ethiopia. Cocoa prices are not set in Ghana. Tea prices are not set in Kenya. I mean, they're set by global markets. So regardless, to a certain extent, yeah, maybe, but regardless of how your currency appreciates or depreciates, it doesn't really make a material difference.